Welcome to the Money School Essentials virtual preview training, and thanks for being here. So tonight is going to be a little mixture of things you might have heard in the past, a few new things that I have for you, and all of this is leading into the 3-day training we have coming up this weekend. Friday starts Friday morning at 10 a.m. Eastern and goes right through Saturday and Sunday. So today we're going to be talking a little bit about different foundational stuff you really should understand and know going into the event, why you probably want to attend the event. And I'll go through what you're going to learn at the event this weekend. So we'll go through and do a little preview of some of the different experts and trainers that Chris and I have coming on to join us to teach all of you. So throughout the training tonight, if you have any questions, we should have plenty of time to answer all of those for you. So I have Shauna here. Most of you probably know Shauna. Shauna is our right-hand woman for everything Money School and Money Multiplier related. So thanks for being here, Shauna, and helping out as well. So she'll be manning the chat, so to say, and letting me know if anything's going crazy so I can stop and answer questions and things like that. So with that being said, feel free to put your questions in the Q&A box, follow along in the chat box, and we'll definitely have some fun here this evening. And congratulations for taking the time out. For those of you on the East Coast, I know it's 7 o'clock at night. And those of you on the West Coast probably just get off work and whatnot at 4, and everybody in between. So thanks for being here. So with that being said, I just want to get a general feel of who is on this training here this evening. So if you've been on existing trainings before, just type in like MSTV or Money School or Money Multiplier in the chat. If you've been following us now, or you've seen one of these types of webinar trainings prior. Or if you're brand new, if you could just write new in the box, like if this is the first webinar you've been to before, if you just hit new, I'm just curious if we have new people or those that have been on prior, and that'll help me tailor the training a little bit this evening for each and every one of you. Mary, you probably can't hear me if you don't have audio. Hopefully she gets that audio figured out. All right, so new, MSTV, new MSTV. All right, so let's see, this will be the weekend number 3. All right, so Pamela, so yeah, we do have a lot of people that have attended not only these free preview webinars, but our actual 3-day event multiple times in the past as well, because each one of our events tends to change with the times and the economy and the markets and what's going on. So we adapt and bring new people on as well. So very common as well. So hello to all the new people. Thanks for those of you coming back that have been here multiple times and just learning to continue to follow and get new strategies and techniques, what's working right now. So with that said, let's go ahead and kick things off. And those of you that have been here, I'm just going to introduce myself one more time. So those of you that are new know who I am. So my name is Stephen Nagy. I've been in the real estate and financial industry since leaving college, really. So out of college, I was a financial advisor with Ameriprise, fully licensed, Series 766, all that good stuff. I did it for a couple of years, and it allowed me to really understand that side of the fence. Now, what I do today with Money School and the Money Multiplier, why you guys are here now, is because this is all about taking control of your money. So as a financial advisor with Ameriprise, I would manage people's money. We would, suggest them what to do, and we would take control of that money for them, essentially. What I do now is give you the power to take back control of your money. Because let me ask you this question: who cares about your money more than you do? Right? So if you care about your money more than anybody else, who should be in control of what's happening with it, where it's invested, and how you're going to be able to live your life? Because what we're going to talk a little bit about tonight is how the traditional way of investing, what you've been told your whole life, go invest in a 401k, work a job and work your way up a ladder, live on retirement income and Social Security and things later in life, just don't work any longer. So I'm going to get in a little bit of that tonight, how you can start taking back control of your money and solving your money problem. Because what we do is we teach 2 different ways to take control of your money. And I'm going to cover both of those here with you tonight. So this is stuff you're not going to want to miss. And Sean, if anything, real fast, anything pops up that I need to know, I can't really keep up with the chat box as I'm going. So if you just want to unmute yourself and just say, hey, hang on a second or something like that to me, we'll make sure I'm keeping up with stuff. All right.
All right. Well,
So I have traveled all across the country and a couple other places, Mexico and Canada as well, teaching clients. I've been in the real estate investment world as well for about 12 or 13 years now. And I've used everything I've learned from being on the financial advisor side through my entrepreneur journey, real estate investor journey, and everything I've done ever since that I'll incorporate into tonight with you, into what we now teach and do with Money School, working alongside with Chris. So when it comes to, why you're here tonight, and why we're teaching this stuff, to me, there's never been a more important time in history to take control of your money. There's a lot going on in the economy and in this country right now. So those of you that follow the stock market, it fell over 500 points today. And I think we're going to start seeing more and more of that kind of thing going on. There's, the Fed right now has printed trillions of dollars. I think it's something like 60% of the total money supply ever created in the United States of America. Over 60% of it has been printed just in the last couple of years. And we live in this weird interest-free environment where banks borrow money basically interest-free overnight. We even get into some negative interest rate stuff at times, and we're able to go out and borrow money very, very cheap, cheaper than it's ever been. And the debt in this country just keeps going up and up and up, and we keep spending and spending and spending. So there's a lot happening right now. So and let me just ask this question to you guys. Have you ever experienced in the past a time where maybe you or somebody was preparing for retirement, and then all of a sudden the markets crashed and they weren't able to retire the way that they wanted to? Or maybe you had a plan in place where you said, hey, I'm going to be able to retire at this certain age and live this lifestyle. And then something else happened in life. And then all of a sudden you're back to work. You're not able to retire. You're drastically turning things down. And if that's ever happened to you, or somebody that's happened to, we have a very strong belief that that's going to happen to a lot of people over the next year or two. We're going to see a lot of changes going on. So to me, it's more important than any other time in your lifetime to understand what's going on and start preparing, and not only preparing, but learning how to take advantage of what is coming up here in the next, I don't know, you tell me, later this year, into next year. But the timing's not important. The strategy and being prepared and ready to go is what's important. And that's what tonight's about. And that's what this 3-day weekend, this coming weekend is about. So with that being said, I want you to think to yourselves, as we go here tonight, where is my money? Where am I currently investing? Who's controlling my money? Do I have it in 401ks? Do I have it in IRAs? Do I have it with financial advisors? Am I controlling it myself? Am I looking ways to multiply what I'm already doing and be able to take advantage? Because not only do I think we're going to see more people lose a lot of money over the next year or two because of market crashes and changes that are going to happen in this country, but I strongly believe that on the reverse of that, on the flip side of the coin of that, more millionaires and billionaires will be created over the next 12 to 18 to 24 months than any time in my lifetime. Because when you understand how to take advantage when there's blood on the streets, that's when you need to get in. When everybody else is selling, that's when it's the time to buy. When you start thinking like an investor, you start thinking like a millionaire, you start thinking and doing what banks do, for instance, what the wealthy do, you're going to be able to mimic and have those same results. So we're gonna get into some things that are very, very serious. So I'm here tonight. Again, my name's Stephen Nagy. I'm here on behalf of Chris Naugle. So Chris Naugle is my business partner. He's known as America's #1 mentor, money mentor. It's probably who you guys saw and why you're here this evening. So when I met Chris a few years ago, he was real hot with his real estate investing career, had a show on HDTV, a pilot series called Risky Builders. And him and his wife, Larissa, had flipped 260 some homes, a rental portfolio of over 100 doors, and we're killing it in the real estate investment world. Now, if Chris was on here tonight, he would be the first to tell you that he has since liquidated and sold almost his entire real estate portfolio. He has very few properties left. Now, he just recently got involved in a couple flips that he couldn't let go because they landed in his lap. And when you can make 50, 60 grand on a deal, you don't just pass on it when you have the ability to do it. But he's not actively out there seeking stuff now. They're not actively out there buying new rentals. And on the opposite, he's selling everything, most everything. So why is Chris doing that? To what I was just saying and what we're going to talk about tonight. Things are changing in this country right now. One thing I want to say is I'm not going to spend a whole lot of time on this tonight because Chris has an unbelievable presentation ready for every single person Friday morning. So this Friday, the 3-day training starts at 10 a.m. Eastern, and you're gonna want to be there live because Chris is doing something, a new presentation that he's never done before. We were just talking about this morning. He's been spending a lot of time recently studying history, studying economists, and listening to people that are much smarter than we are and what they're saying and what they're doing. And he's taking all of this crazy information and he's put it all together into this presentation on Friday. So those of you that have been to our past 3-day trainings, you know, Friday is one of the most important days, but it can drag on a little bit because we get into real detail about how banks work. Because again, if you want to be successful, you got to mimic what the wealthy do. You need to do what the banks do. And we'll talk about that because banks, every dollar you give them, they're making 400 to 1600% returns on every dollar that you give them. And then they pay you what in a savings account? Your money's sitting in a savings account. What are they giving you on that? 0.01%. And then they're making 400 to 1600%. So how would you like to be able to do that? So understanding how banks work and getting banks out of your life, becoming your own banker. I mean, I have a sweatshirt on here tonight too. It's actually a little chilly in South Florida for once, but becoming your own banker is so important. So we dig in deep and we're still going to incorporate how banks work and the importance of banks and when to use them, when not to use them, when to leverage their money versus our own money in our own bank and things like that. But Chris is going to go deep into the economy. So I'm not going to spend a whole lot of time on it tonight. I'm not going to break out the board and draw and show that stuff because I just want you to be there Friday to learn from Chris because he's super excited to present this stuff for you. So one thing, Shauna, let's go ahead and I want to start throwing the link out there for anybody that happens to be on right now and they know that they want to attend the training. So what we're doing for those of you that are on tonight, we're going to give you a discount code. So Shauna will put the link in the chat box. So if anytime tonight, you know that you want to be there this weekend and learn, learn from Chris, myself, and all the experts we're going to bring on, just go ahead and get enrolled. And then Shauna will put the discount code on there. So we'll give you a discount to attend with us. And just to make it clear, we do record the entire event. We give you the recordings right after it's done. So you can follow along. Shauna does an awesome job time stamping the entire thing. So if you ever want to like hop, skip, and jump around to different parts of it, she lays out the different parts of it so you can jump right to the section you like. So go ahead and hop on and get enrolled anytime you want here tonight. And you'll get all the bonuses and everything like that and the discount. No worries on any of that. So I just want to get that out of the way. So we'll go in deep on all that. But like I said, I mean, what's going on right now in this country is just insane. And it's, history repeats itself. And if you knew somebody back in 2008, when we saw the last housing collapse, that lost money, or maybe you lost money yourself, or in the dot-com bubble, or at 9/11, or I mean, how many of you remember the 80s when interest rates were in the teens and going into the low 20s? I mean, could that happen again? We'll see. Inflation's running away right now. The official number is 7%. If you use the old inflation way of calculating, it's about 15%. And most people believe it's up over 20%. So it's not great stuff. So as this happens, again, it's just very important you understand what's happening and how to start taking advantage of it. So when we talk about money school and the money multiplier, we really do concentrate on a couple key areas. And we like to set this up by saying, we basically have 3 pillars of education and what we teach. So when it comes to controlling your money, you're always going to take advantage of laws and rules and things that the wealthy people do to be able to get you to where you want to go that much quicker. All right. And we'll talk about that as we go here tonight. And one thing that I've learned is wealthy people, wealthy individuals, and when I say wealthy, multi-millionaires, people that have been successful in life one way or another, whether that's through entrepreneurship and owning businesses, whether it's just being smart with money and investing properly. But one thing that we found is 99% of wealthy own and control real estate one way or another. Now, one of the reasons why I love real estate is because there's so many different ways to take advantage of real estate. So we talk a lot about active investing versus passive investing. So actively going out there, for example, in real estate, active investing would be going out, purchasing a home, adding value to it, and reselling it, commonly known as a flip. Or going out and purchasing a home, finding somebody that wants to live in that home and renting it to them, where you're the landlord, they're the tenant, and now you have a rental property. Or learning multifamily investing, where you buy apartment complexes, and everything in between when it comes to active in real estate. So that's, owning the property, that's controlling it, doing everything with it. In that case, you're creating a little bit of passive income typically coming in through the rents. Although, how many of you own rental properties? And maybe it's not too passive, right? And we joke a lot about that in other ways of doing passive income, because a lot of times on the rental side, somebody might get sick of toilets, termites, and tenants, as we say, right? So it's one of those things where even with a property manager, there's still some work that has to be done, but you do create that income coming in. And on top of that, you take advantage of the appreciation. So housing over the long term is always going to increase in value, or always has historically. So not only do you have money coming in on a regular basis through rental properties, for example, but in the long run, your property values are increasing, where you can later sell those homes and make that profit, or refinance them, or get a HELOC on them, where you're tapping into the equity on that home and taking advantage of all that, which we can talk more about as well tonight. So real estate has a lot of different uses. On top of not only active real estate, there's the passive side. So this is things like private money lending, real estate syndications, real estate private funds. So this is somebody that doesn't want to necessarily be on the active side, but they want to be able to take advantage of real estate. They want everything that real estate has to offer without actually doing it. So in that case, what could happen is, let's say Chris Naugle gets this flip that lands on his desk that's going to make him $50,000 profit. But to make $50,000, Chris Naugle needs, let's say, $250,000 to close on that deal up front, rehab the property, hold the property, holding costs that are involved, insurance, taxes, things like that, the cost of money, and then needs to exit that deal. So there's time involved right there too. So Chris Naugle needs $250,000 to do that deal, but he knows he's going to sell it and make $50,000 at the end of the day. Okay. So where does he get that $250,000 from? Well, somebody like myself, that's a passive real estate investor, he can come to me and say, hey, Steven, I have a home that's worth $400,000. I'm getting it for $250,000, or I'm getting it for $220,000. I'm putting $30,000 into it. It's going to take 4 months to complete, another 2 months to sell from start to finish. So for 6 months, I need to borrow $250,000 from you. And I'm going to say, Chris, awesome, no problem. Here's the $250,000. In return, I want you to pay me 12% return annual interest on my money, or I want to charge you a couple points and 10%, or I want a portion of the profits on the deal, or whatever those terms are. But all I'm doing is giving somebody that needs my money. They're paying me to use my money, and then everybody wins. The flip is done. They make their money. I lend my money out for doing nothing and get nice returns, so I can continue to grow my wealth and rinse and repeat. So that's the basics of passive and active investing. And then there's lots and lots and lots and lots of ways that we can do that. Now, one of the things at the 3-day training that I'm going to teach you guys along with Chris is we're going to show you how to both get into the active side of real estate investing. We're actually bringing in one of A&E stars, a guy named Jamil, who actually, let me just tell you about Jamil real fast, because his bio is a little bit too much for me to completely memorize. So Jamil is an internationally renowned real estate investor, wholesaler, expert with 18 years experience. He's a co-founder of Keegloy, #1 wholesale company in the world with over 75 franchises. He routinely closes 60 to 80 real estate transactions a month and has completed over 5,000 deals. So if you're new to real estate investing, you're looking at taking your business to the next level, and you want to be on the active side of finding deals and getting these deals done and completing over 5,000 deals. Who better to learn from than somebody like Jamil, right? So we have Jamil coming on the training to teach you guys exactly how to get started actively investing in real estate. Now, on the passive side, Chris and I are going to spend about an hour, hour and a half with you on Sunday talking about passive real estate investing and how you can start moving your money and all the different types of opportunities that come along with passive investing. So everything from $10,000 long-term 10% deals that will pay you 10% returns over 6 years, to getting involved with multifamily apartment complexes, to buying mobile home parks, to individual flips, to long-term rental properties and partnerships. So Chris and I are going to teach you in the section on Private Money Club all about how you can start doing that right away with your money. And then imagine if we start pairing up the people that are active investors learning active flipping with Jamil, that's all that's holding them back is the money, with the people over here that learned about passive investing that just want to lend that money. Then boom, we start creating success, not only in one side, but in two different ways. And that's what money school is all about, are creating these win-win situations. So just give you an idea of what we're going to teach you at the 3-day training when it comes to real estate investing. Not to mention all the tax advantages and everything else that go along with real estate. Now, pillar number 2, when it comes to the 3 pillars of foundation of money school and taking back control of your money, is of course money. So when it comes to money, there's 2 laws that you really, really need to understand. And really there's 6 laws of wealth that you need to understand. But when it comes to money itself, what it is what I've learned is there's 2 important things that every single successful person implements into their own lives. Number 1 is compounding interest. You have to learn how to have your money compounding for you and growing at all times. Okay. So if you want to learn more about compounding interest, the money multiplier, and what we do with the infinite banking concept, and specially designed and engineered whole life policies, join me tomorrow at 1 p.m. on the Wealth Webinar Wednesday, because tomorrow I'm going to gear more towards the money multiplier and how you can start taking advantage of compounding interest and growing your money that way. So join me tomorrow at 1 p.m. on the Wealth Webinar to get more into that, because that's a longer subject. It takes a good hour, hour and a half to get through. I couldn't fit it all in tonight. So join me tomorrow for that aspect. But I can tell you this, compounding interest, Einstein said it best. Albert Einstein said, compounding interest is the 8th wonder of the world. Those who understand it, use it. Those who don't, pay it. So ask yourself, do you want to keep paying compounding interest to other people, or do you want to start compounding your money and growing your wealth the way that the wealthy do? So compounding interest is rule number 1 of 2 that you must follow at all times. Have your money compounding, and uninterrupted compounding interest is that much better. And that's what the money multiplier allows you to do, which I'll show you tomorrow. Stop putting your money in banks. I'll say it one more time. Stop putting your money in banks where they make 400 to 1600% returns on your money and they pay you 0.01%, and start putting your own money in your own bank where you take advantage of things like uninterrupted compounding interest. And then rule number 2 that you have to start implementing immediately is stop letting your money sit still. Lazy money is doing nothing for you. Okay. You have to keep your money moving at all times. So rule number 2 is always have your money working for you just as hard as you work to get that money in the first place. And when you combine those 2 things together, it's amazing how much quicker you're gonna be able to reach your goals. I promise you that. So we'll get into compounding interest, and obviously the entire training is based around money. Now, before I start getting into, or let me finish up with the 3 pillars, which is where we talk about legacy, which is another strategy for using the non-qualified money and the money multiplier. We're creating that generational wealth, and everything we do is geared towards building that. Because I don't know about you guys, but you know, my mom and dad are amazing people, but I don't really have high hopes that they're going to leave me with like lots and lots of money when they pass. And, you know, while they've always been there to support me, like I wasn't given a nest egg or anything like that to start out in life. So everything that I have, I've worked for and earned myself 100%. Now, is that good or bad? I think that's arguable, right? But what I'm doing with my son, and I would recommend, and I have this conversation every day with people, is not only provide maybe something of a safety net where they can go out and explore and be creative and do what they want in life, but more importantly, teach them financial education. So part of my legacy aspect that I'm doing for my son is I'm using the tools that I'm showing you guys here tonight to set him up for the future. So he's 6 years old now. So when he gets older after college or later in life, whatever he ends up doing, he's not only going to have a little bit of money to work with to get him started, but more importantly, the only way he's going to get that money is if he proves to me he understands financial education. He understands the rules of wealth. He understands the laws of wealth and the rules of money. He understands, everything that I'm teaching you. And if he can prove that to me, then he's going to be set up very nicely. And so that's what I'm doing. You guys decide what you want to do with your families, but how many of you think that that's important for you? And not only being able to set them up, but protecting your money. Because how many times do you hear about a lawsuit that comes along and somebody loses everything? They get sued and they lose everything. Or something happens in life unexpectedly and all of a sudden it's all gone. It happens all the time. So being prepared through things like wills, trusts, having a game plan in place for your family, very, very important. So I will mention this right now. We have another expert coming on. It might be on Sunday, Brent Carlson with Corporate Capital. And he's going to talk to you guys about things like asset protection. Being able to protect the money that you're making. Because it's great to make a bunch of money, but if you lose it all, what's the point? So not only making it and earning it, but also protecting it. So that aspect's very, very important. So we will bring on an expert to talk more about that with you as well. All right. So before I get into more of this with the 3 pillars, I did want to share one thing on here outside of this presentation, and these are the 6 laws of wealth. So you guys have been hearing Chris talk about this a lot lately. I just wanted to show you real briefly what he's talking about, because to me, this stuff is very, very important. So let me just pull this up right here. All right. So these are the 6 laws of wealth. And so you'll see. So law number 1, save no less than 1/10 of what you're earning. So this is the money you keep and no one has claim to but you. The rest of your income will be spent on expenses. Don't allow FOMO to influence your wallet. Very, very important right there. And as we start getting into tomorrow's wealth webinar and the money multiplier, and then into Friday and this weekend, this aspect right here is going to make more and more sense to you. Number 2, make your money work for you. So as I was saying earlier, you always want your money working and moving and making more money for you. So we are not taught how to make our money work for us. We are only taught how to work for money. The 1/10 you kept should be put to work to earn more interest. And that interest is now creating additional interest workers that go to work. So if you've heard us before, we talk about little green men. You always want your little green men out there working and making more money for you, whether you're awake, whether you're sleeping, whether it's a Sunday or whether it's a holiday. They're always out there working and making more money for you. I think Warren Buffett said it. He said, if you don't learn how to make money in your sleep, you're going to work till you're dead. You got to have your money working for you at all times. Number 3, only invest in things you know and understand. So invest and lend to things people who have shown, not just said, but have shown they are the experts in a specific industry through time, wisdom, experience, and the ability to pay. Avoid unnecessary risk due to greed or impatience. There is no get rich quick. And that's why I love these laws of wealth. I've been saying this for years. There is no get rich quick. That's not a thing. I guess the lottery, right? But good luck with that. Get rich, absolutely. But this is a marathon. This is not a sprint. So these laws are very, very important, and don't expect it. If you start trying to take advantage of greed and take advantage of things, it's not going to end well. And you hear this a lot from crypto investors. Tomorrow morning, we actually have a crypto investor coming on, WTF podcast live stream at 9:30 a.m. Eastern. And so Chris and myself and the crypto guy are going to be on talking about crypto. And then at the 3-day training, we actually have a crypto expert coming on to really lay it out for you. So his name's Spencer Montgomery, and wait till you guys meet him if you haven't already. Spencer is awesome. If anybody's in any of Spencer's coaching or programs, let us know in the chat, because I've heard nothing but awesome things about Spencer, the way he lays it out and the basics. But he'll be the first to tell you, like, Bitcoin, Ethereum, like the foundations of crypto, stay away from some of these shit coins and some of these meme coins and things like that. And you know, our challenge for crypto investors has always been, great, you're showing all these gains, you've made, you know, hundreds and hundreds of percentage points and doubled and tripled your money. Now keep it, right? Can you take it out and actually take advantage and realize those gains? Or are you going to watch it all go away overnight? And that's what can happen with this volatility of a crypto market. So keep it. It's the same thing. Invest in what you know and you understand. Invest with people that you trust, that you follow, that you believe in. And that's what it's all about. And, you know, whether it's real estate, whether it's investing, whether it's business, whether it's money, entrepreneurship, the one common ground I've seen when it comes to all of this is relationships. Relationships are one of the most important aspects, in my opinion, of success, because relationships give you resources and advice when you need them. Now, if you listen to some people, you know, they say, don't even hang out with friends. All of your friends should be your network that are always improving you. I won't go that far, but the people you surround yourself with do make a difference, right? Do you guys agree with that? You know, if you have somebody constantly telling you can't be done, it can't be done, this isn't real, this is all fake stuff, then I don't know what to tell you. I mean, we hear that sometimes from the money multiplier. Oh, it's too good to be true. Or they'll talk to their friends about it. You can't do that. That's not even a real thing. They're trying to scam you somehow. It's not even possible. First off, you don't pay us any money whatsoever. And second off, this is a strategy that's been used for over 200 years before the tax code was even invented. And the companies that do these insurance policies have been around for 120, 130, 150 years and are the strongest in the country when it comes to financials. So understand it and go that route and try and keep what you do. Number 4, be realistic. So it goes right in there with number 3. Wealth will flee its owner if the owner seeks unrealistic returns, or if its owner follows gurus, fraudsters in pursuit of romantic and unrealistic things and lifestyles. So keeping up with the Joneses, for instance. Why? This should be important for you and your family. Now, if you want to go buy a Lamborghini and you own an apartment complex and the passive income from that apartment complex is paying you enough income where you don't need the money for expenses and other stuff, and you want to go buy a Lambo with it, I'm good with that. I got no problem living a great lifestyle and having nice things. Brent Kessler, owner and founder of Money Multiplier, has a private jet he flies around in and has multiple homes all over the country that he's always hopping on webinars from. Is that good or bad? It's up to you. Everybody's different. To me, it's a beautiful thing, because guess how Brent Kessler pays for all of that? Through his policies, through his bank, and through passive investments that pay him the money to be able to do that. You know, when I first learned about real estate investing, somebody told me this. They said, anytime you want something in life, build it backwards, and then you can get it. And what they mean by that is, hey, I want to buy a new boat. I know that boat's going to cost me $1,500 a month to own, to maintain, and to store. Okay. Just using a random example. So think to yourself, what do you want? I know $1,500 for a boat. So what did I do? I went out there and said, okay, I need to purchase, at the time when I was in active real estate, I need to buy enough rental properties that are going to pay me enough rent on a monthly basis, up to $1,500, to be able to cover this boat that I want to buy. Okay, I want a new car. Now I need to add a couple more rental properties that are going to make that car payment. Now these houses are my boat houses. These houses are my car houses. These houses are my vacation travel houses. So everything I want in life, that's how I built it. I went out there and said, I need to create this much income. Now doing passive investing, passive private money lending, exact same thing. How much principal do I need to lend out at 10 or 12% to pay me enough monthly interest income to be able to go buy and do what I want in life without ever touching my principal that I'm going to use for later in life, for retirement and for legacy aspects. So it's all interest that I'm able to live on this sort of stuff. Okay. So think to yourself, what do you want? And we'll reverse engineer it. Right. So very important right there. So number 5 of the 6 laws of wealth is be of service. Wealth shall find you if your heart and soul are focused on solving other people's problems. Unconditionally give and solve people's problems. Find joy in giving, and you will be rewarded handsomely. How many of you love the idea of helping other people and achieving your goals by helping other people? It's why I do what I do every single day of my life. It's why Chris does what he does every single day of his life. Do you think Chris wants to be out in California right now, away from his 2,500 miles away from his little girl and his wife? No, but Chris is out there building relationships for the money school for every single one of you that's on here right now to take advantage of later on. That's why Chris is out there, because we're building this thing for you to help more people. Something that I learned when I first got into real estate investing that was hammered into me by one of my mentors at the time was to create win-win situations. If you can create enough win-win situations, you'll be able to do anything you want in life. And the way you create win-win situations is through helping other people. Let me explain. So the money multiplier, those of you that have money multiplier banking policies, how much do you guys pay to the money multiplier for strategy calls, for mapping services, for support, for anything that you do, for training, to learn how to do more policies, whatever? How much do you guys pay for any of that? Zero, right? We don't charge anything. You'll never pay us a dime to the money multiplier for anything we do with the banking policies. Why is that? It's because when Brent founded the company, he realized if he creates win-win situations, it helps and benefits everybody. So let me say this, follow me for a minute. How do we get paid for creating banking policies? We get paid direct commission from the insurance company for bringing them the business. That's why you don't pay us, because the insurance company pays us for doing it. So why do we do all the ongoing support and all the ongoing training and all the ongoing mapping and help? Because we know if we can teach you how to properly do infinite banking and build your own bank and have your own bank and be your own banker, that you will eventually open more policies for yourself. You will eventually open policies for your kids. You will eventually tell your friends about it. And then if we're right there helping you every step along the way and you're ready to open another policy, who are you going to have open it for you? Of course we are, the money multiplier. So, and how do we get paid? Through direct commissions, through more policies. So you get all the help you could ever want in your entire life. We're able to continue to get paid through additional policies. What does that create? A win-win situation. And it's a beautiful thing. So the more people you can help and be in service at, very, very important. And then number 6, law of wealth, be willing, legacy, be willing to share and pass on your knowledge. If one fails, we all fail. So those 6 laws of wealth right there, are going to go into the foundation and the pillars of education that we were just talking about. So that's why I wanted to bring that up right there. And Chris does have a new book coming out either later this year or next year based on those 6 laws of wealth. And it's going to be an awesome thing. So I'm super excited for that. All right, let me pull back up this presentation here. How are we doing, Shauna? All good?
I think we're doing great.
All right. So, and of course, you know, I have the GPS on the screen. I mean, we're going to help you. Like I said, with the support just now, we never teach you and just leave you on your own. We're always here for you. So after the training, for example, I'm going to request that you schedule a call with myself or one of our other money mentors so we can help you, because you're going to learn a lot over the 3 days. For some of you that are newer to financial education and controlling your money and investing, it's probably going to be a little overwhelming. That's one of the reasons we do the recordings, why we do extended day question and answers. But more importantly, as soon as the training's over, we are going to request that everybody that's there schedule a call with us so we can help you create this roadmap. So everything we do, whether it's non-qualified funds, with becoming your own bank with the money multiplier policies, we have a mapping team to show you the exact path to accomplish your goals with that policy in the fastest and most efficient way possible. With your with your qualified funds, with your retirement money, those of you doing self-directed investing that we're going to talk about, taking advantage of tax strategies through qualified funds. We have a money movement team that's going to show you exactly how to move your retirement money, your qualified funds, to take advantage of all this stuff. So no matter what type of money you're moving, you're going to have a path and a plan to be able to follow. And that all starts following the 3-day class and hopping on the phone with a money mentor so we can start laying these plans out with you, strategizing about your personal situation and building from there. Because it's one thing I learned, there's no cookie cutter strategy or response for everybody. I could take two people that are the same age, both make $150,000 a year, both are married with kids, and they could have completely opposite financial pictures. One of them might be doing great, have a bunch of investments, disposable income, doing what they want. And one of them might be trying to keep up with the Joneses, have debt through their eyeballs, and don't know where to turn. They make the same amount of money. They start in the same exact spot, but they're in completely different places now. So everybody's starting locations very different. So think to yourself, where are you starting now? Where is your money now? And what strategies are we going to start talking about to implement to move forward to get you to where you want to go and reach those goals? So again, the class is, I know we've already put it up here, so I'll go over this quickly. The 21st, 22nd, and 23rd. So one thing I wanted to hit on, and you guys have seen our trainings before, we talk a lot about the 5%. So basically what the 5% is you could take a group of people and 95% of them are never going to be successful. It's just the way that life is. Social Security Administration tells us this. If you take 100 people, 1 is wealthy, 4 are financially secure, the rest are pretty much screwed when it comes to retirement age. So why is that? Why does it happen? There's lots of different reasons. And I'm not going to get into all of it right now. You can think to yourselves, what's held you back in the past? Why are you not, on track to reach your goals, things like that? Or maybe you are on track and you just want to take it to the next level. But what we found is there's really 3 things, that really cause this to happen. And I want to hit these because I want to show you how we're going to help you start overcoming these at the 3-day training, because these are very important. So first off, inflation is probably, and remember, we've been talking about this for a while now. So before inflation started to really go crazy like it is right now, inflation's always been a killer. And all inflation is what a dollar buys you today will buy you less in the future. Okay. Number 2, volatility. So these are the big ups and downs. I saw a statistic recently that if you took the last 10 or 12 years, on average, somebody would have made, let's say 12% returns if they would have just invested their money and just let it sit over 10 or 12 years. They would have made on average 10 or 12% returns annually on that money. However, if somebody was for instance, trying to time markets or was, jumping in and out of the markets, if they would have spent 3 days out of that 10 or 12 years outside of the markets, they would have lost money over that time span, because there's crazy volatility that can occur. So again, this is going back to what Chris is going to talk about on Friday at the training. So I'm not going to get too much into it, but volatility can kill dreams and hopes, retirements and plans, and you don't want to be part of it. And there's no reason to be. There's ways to take control of your money right now where you can continue to grow it, outpace inflation very easily, and not have to be in these risky assets. It's one of the things that kills me about 401ks. And, it goes right into enemy number 3, taxes. And then I'll kind of talk a little about 401ks. But, taxes, what are taxes doing right now? They're going up, right? Taxes seem to always increase. So how do we start taking advantage of strategies that are out there to not pay as much in taxes? And so there's a couple ways we're going to do this at the 3-day training for you. So there's a saying that this guy, Solomon Halamani, who's going to be out the 3-day, says. And what Solomon says is, he says, there's one tax code in the United States of America. I take that back. There's 2 tax codes in the United States of America, one for the informed and one for the uninformed, and both are legal. Okay. So think about that. There's 2 tax codes in the US, one for the informed and one for the uninformed, and both are legal. So which one are you taking advantage of? So what we've done for the 3-day training, recognizing that we have a very large diversity of students and clients that come to these to learn from us. So what we've done is we've brought in experts to help everyone that'll be on, depending on your situation. So what I mean by that is if you have a normal job, like a W-2 job where you get a salary, you have a normal, you go into work or whatever, a W-2 type job, or if you're an entrepreneur, you have a 1099, maybe you're an independent contractor already, something like that. But let's say you're doing well, but you're not quite, making, real crazy money. So what I mean by this, and not even real crazy money, but money where you're comfortable. So what I mean by this is anybody that's under a 6-figure tax burden annually. So if your taxes are under $100,000, so $100,000 or less, if that's what your tax bill is annually, then we're going to have somebody that's going to come on and talk to you about things you can do to start saving money in taxes right now. One of those things, just to give you an example, would be to start a company, start an LLC, and start running some things through that LLC, because an LLC is going to open up a whole world of tax deductions for you that you can start taking advantage of. And then maybe incorporating one of your money multiplier policies to funnel some money through one of these LLCs to start doing stuff with and creating tax deductions that way. And then maybe getting involved in real estate deals where you can get some tax savings and things happening. So we're going to bring a tax expert on to talk to you guys. And then if there's anybody that is over a 6-figure tax burden annually, so you're paying over $100,000 in taxes, we're going to bring Solomon Halamani on that teaches what's called 1041 tax strategies. And these are taking advantage of things like special trusts and charities and foundations to almost eliminate your tax bill. So if you're over 100,000 right now, you're going to want to be on Saturday. I believe it's from 2 to 4 and it's not recorded. So you're going to want to be on live 2 to 4 Eastern Saturday to listen to Solomon to teach you about 1041 tax exchanges. I believe it was also Warren Buffett that said there's a reason why he pays less taxes than his secretary. There's 2 tax codes, one for the informed, one for the uninformed. Which one do you want to take advantage of? And this is all legal stuff, dude, guys, all legal, all ethical. It's just a matter of having the knowledge and implementing it. So we're going to start saving you a bunch of money on taxes. And I can promise you, if you follow what we teach you, it'll save you well more than $200 in taxes, the cost to attend the entire 3-day training. All right. So when it comes to the solution for all of this stuff, that's what the 3-day training is all about. So things like creating wealth multiple ways. So again, when we talk about, real estate, one of the reasons I love is there's so many different aspects of real estate investing. And then we start getting into stocks. I mentioned 401ks earlier. My problem with 401ks is you're giving up control and you're putting off paying taxes until a later date. Okay. Now there's certain times when that can make sense. Maybe you can save money on taxes now. Maybe you don't have a plan for an extravagant retirement where you really don't have much money. So paying taxes on that retirement money, then, who cares? But if you're somebody that, really wants to get the most out of life and be able to live and do what they want, why are you putting off paying taxes now when taxes are constantly increasing to pay them later when they're higher? Right. And you're giving up control. So in your 401k, I can't use my 401k to go buy a rental property, do a private loan to Chris Naugle, go buy crypto with it. I can't buy, individual notes. I can't invest in a friend's business startup or intellectual property or anything like that. You're limited in a 401k to the funds that they offer you, the indexes that they offer you, maybe cash, maybe some treasuries or bonds. That's it. So you don't have much control over it. If you take the money out to use it for something else right now, they ding you with a 10% penalty plus the taxes. So if you're getting a match in a 401k, maybe there's an argument to be said there. But to me, it's all about controlling that money, right? And again, everybody's situation is different. These are the types of talks that we have on those one-on-one calls after the 3-day training. But just want to throw out some examples. So, one of the things that we can do with a 401k is we teach what's called hedging. So there's ways to set up specific trades within a brokerage account where if your 401k does lose money because of a market crash or something like that, your money over here, hedging that money is protecting that money, where you're making money here against those losses. So it's kind of like an insurance policy on your 401k. So we can teach you things like that when it comes to stocks. Like I mentioned, we have a crypto investor. Notes. How many of you guys have heard about notes? So what notes are basically, notes are mortgages. Okay. So whenever a mortgage is created, it's basically what's called a promissory note. And these are referred to as notes. So what we've done is we've developed a relationship with the #1 note investor in the country. His name's Kevin Shortell, and this guy's unbelievably awesome. So one of the strategies he's going to teach you at the 3-day training, I think he comes on Sunday, but one of the strategies Kevin Shortell is going to teach you is how to take advantage of a new program that the government just came out with. So if any of you guys seen what the Treasury Department has done with this $10 billion fund that's designated for people that are in trouble and behind their mortgages, facing foreclosure. Have you guys seen what they've done? So this is all approved. This was I believe this was in the last infrastructure bill. So this is a $10 billion fund that the US Treasury has. It's ready to go. It's being implemented right now. People are already taking advantage of it. And what this does is this is giving folks that have fallen behind in their mortgages due to COVID or whatever's happened over the last couple of years, and they're either now in foreclosure or they're way behind on their payments. So what the US Treasury has done is they said, listen, if this is your situation, we're going to help you catch back up on those payments, and we're going to help you over the next year make those payments so you can keep your home and you don't go into foreclosure. And the way the US Treasury has this set up is through direct payments to the mortgage note holder. Okay. In most cases, who owns that mortgage note? So those of you that own a home or own rental homes, who owns the note on your home? Who owns that mortgage? The bank typically, right? Or a lot of times the bank or the mortgage company will sell that note to a mortgage service, what's called a mortgage servicer. Okay, so they now own that note. So they own the principal, they own they have the money that's coming in on it. If you don't pay on it, they foreclose on it and take that property back, all that stuff. So the Treasury Department says, we're going to give homeowners, I believe it's up to $80,000 in California. It's up to $40,000 in some other states and everything in between, depending on the state that you're in. We're going to give you up to that much money, up to $80,000 in back mortgage payments directly to that bank, and up to 12 months of additional payments into the future, depending on the situation. Now, that money's going to go directly to the bank. Once again, who's getting bailed out? The banks. How many of you are sick of the banks getting bailed out? I know I am. It happened in 2008. I mean, I know so many real estate investors that lost so many investment properties, and everything went to shit and went into foreclosures and went into bankruptcies. But guess what? The banks that made those shitty loans, they got bailed out billions and billions and billions of dollars. Nothing for the little guy, right? It's just, I could go on for days about that shit. But the bottom line is what are we doing now though? We're becoming your own bank. You're the bank. So how about you get bailed out for once? How about you take advantage of stuff like this, right? So that's what Kevin's going to teach you. He's going to teach you how to buy these notes, take advantage of this new $10 billion fund that the Treasury has, and the Treasury is going to pay you those direct payments up to $80,000 on your notes that you own. So how many of you guys would like to learn that? Again, that one reason alone to me is a reason to attend the 3-day training. And if you can't make it live, just go right to the timestamp on the recording and watch that section for all I care. But Kevin's going to teach you that. And it's one of the coolest things I've seen so far in 2022. Now, at the beginning, what I was talking about was over the next year or two, there's going to be more opportunities for anyone that's paying attention to make a ton of money. That's the bottom line. There's going to be lots of ways out there. Now, what I want you guys to understand is you're never going to go out there and take advantage of people. You're never going to go out there and take advantage of others. You're going to create these win-win situations. So the US Treasury giving me $80,000, guess what else that does? I taught that person that lives in that home that's facing foreclosure how to do this program. So what do they get out of the deal? They get to keep their home. Their family doesn't have to be evicted. They don't have to get a foreclosure on their record. They don't have to be forced to move into a smaller property with their kids and maybe go out of the school district and everything that goes along with being forced to move out of your home, right? So they get to keep your home. So it's creating these win-win situations. And everything that we're going to do moving into this year and next year is going to be things like that create these situations. You just got to know what you're doing and you got to learn how to go out there and start implementing this stuff. So we're going to be there to help you every step along the way. So just wanted to point that out right there. Obviously foreclosures and pre-foreclosures are going to be a huge thing coming up. Even with programs like this happening. So how to go out there and help people and get into properties, things like keys for money for keys is something that we were doing a lot of after 08. So going out and saying, hey, listen, you're going to lose the home anyways, but how would you like $10,000 to use as a down payment so you can move into another home, right? Because they're being evicted anyways. So what we would do is we'd go to these short sale properties, these pre-foreclosures. We'd literally create, all this legally, it's all contracts and everything, but we give them $5,000, $10,000 cash for keys is what the program is called. So we give them cash on these deals where they could take that money, go move into another home with their family. But what it would do for us is it would get them out of the property without destroying it. So then we can take it, we can rehab it, we can flip it and make the money on it on the active real estate side. So just some examples right there I wanted to share. And there's gonna be a lot of that kind of stuff coming up here in the next year or two. And again, if you're on the passive side, develop these relationships with these active investors where you're lending the money so they can go out and do all this stuff and make this stuff happen. So private funds, we'll introduce some new private funds we have going, private loans and be the bank. So all very, very important stuff right there. So what I want to get into real fast, when it comes to the money moving, we talk a lot about hidden equity. So we're going to hit this on Friday. So if you own a home or own investment properties, tap into the equity. Matthew Sullivan with Quantum RE does what are called home equity agreements. He had something come up this weekend, so he's not going to make it. So we're actually going to email you his recorded presentation. But since he's not going to be on, I'll give you like the basics. So what a home equity agreement is it's tapping into the equity in your home, just like a HELOC does, and it gives you the cash. But instead of having to repay that money through a HELOC, you're not going to repay any of the money that they give you now until you sell the house later on. So it gives you access to all that money now, and you don't have to worry about it till later on paying it back when you sell the home. So why would you want to do that? Well, a lot of people have equity in their homes right now, right? So if you have 100,000, let's say you have $150,000 in equity in your home right now, you can access a home equity line for 100 grand at 3%. Why would you not take advantage of that? The money, that $100,000 in equity right now is just sitting in the rafters. It's sitting in the drywall, it's sitting in the walls. It's not doing anything. But if I could take that money out of the walls, out of the ceiling, out of the attic, and now I got 100 grand, what can I do with that? I can go lend it to Chris Naugle on a deal and make 12%. What's 100 grand lent out for a year at 12%? It's $12,000. How much is that divided monthly? Because these mostly are paid monthly interest payments. That's $1,000 a month. How much is that new car you want to buy? Oh, $1,000 a month. How would you like to be able to pay for that new car by tapping into money that you didn't even know was there before? So that's what, the power of a home equity agreement or a HELOC loan can do for you. And we'll get into more detailed numbers with that on Friday, but just again, throwing out examples of things. Keep that money moving. Think to yourselves, where is my money? Where can I access money? Can I take a 401k loan right now and do something else with it to get that money moving and out of the markets if I think a crash is going to happen? Can I tap into the equity in my homes? Can I, instead of having $50,000 sitting in a business or a savings account at the bank, can I take that, put that into my own bank where it's now compounding uninterrupted, guaranteed for the rest of my life, while simultaneously I'm using that money and keeping it moving and making more money through private loans, through additional real estate investments, through private business loans and things like that, right? So there's so much money, keep the money moving. So just start thinking to yourselves, where's my money? Where's it going? Can I start redirecting money into these policies, pulling it back out and using it? Things like that. And then of course, we are going to get into what is known as the $1 trillion source, which are self-directed retirement accounts. So, I teach this a lot, but something special we're doing at this 3-day training that we've never done before is we're actually bringing the man himself, the owner of Horizon Trust Company that started this, that's done millions and millions of dollars worth of deals through his self-directed IRAs, and owns a very successful company and just has a crazy lifestyle. I mean, Shauna could tell you about it. This guy's flying all over the country on private jets all the time. Chris was just down with them in Miami and Mexico, and they're jetting all around on his private jet. And I mean, this guy lives the life, you know? So Greg Hurling. So Greg Hurling is going to come on and he's going to tell you this stuff straight from his mouth. I think he comes on Sunday as well. So you guys, I'll let you listen to Greg on Sunday, but the $1 trillion source, and the reason we call self-directed IRAs the $1 trillion source is because plain and simple, there's trillions of dollars in retirement money out there. So not only putting that money to work yourself, but also tapping in for people you know and teaching them how, hey, you can start doing this stuff and investing in my real estate deals. You can invest in my business. You can do all these different things, just showing other people how to do it as well. So self-directed IRAs are awesome. And what I was talking about earlier with, two different places where your money is. This is important. So when you're thinking about, where is your money and whatnot, you got to understand there's two different categories of money, so to say. Okay. So there's what we call qualified funds. So qualified funds are money that are in retirement accounts. And what qualified means is the IRS has special tax treatments for this money. So for instance, in a traditional retirement account, whether that's an IRA, a SEP, a simple, a health savings account, a 401k, a solo K, in a traditional retirement account like that, what happens is the money goes into the retirement account and it has to grow within that account until you're 59 and a half years old. If you take it out earlier, you're going to pay a 10% penalty, and the money within that account is going to grow tax deferred until you pull it out after 59 and a half years old. And then when you pull it out at that time, you're going to pay taxes on it then. So it goes in pre-tax dollars, it comes out and you pay taxes on it then. Okay. That's a traditional qualified funds. And then you have what are called Roth qualified funds. So this can be a Roth IRA, a Roth 401k, a Roth solo K, a Roth simple. And what a Roth is, the special tax treatment for Roth money is the money goes into the policy after taxes are paid. Once it's in there, it now grows completely tax-free. If you pull it out before you're 59 and a half years old, depending on how long it's been in there and whether it's principal or whether it's profits and what you're pulling it out for, sometimes there's a 5-year rule where you can pull it out for special uses without the 10% penalty. But for basics, let's just say if you pull it out before 59, you pay the 10% penalty. But if you pull it out after 59.5%, you never pay taxes on any of that growth within the policy. So it goes in after tax, and then all of that growth within the policy is now tax-free when you take it out. So if you're going to have retirement money and have it in qualified funds, a Roth, in my opinion, especially if you're younger, is the way to go to take advantage of tax-free growth. Because imagine a self-directed Roth IRA when you're 30 years old. Let's just say you have $50,000 in that thing. Maybe you did a Roth conversion from an old 401k. Now you got $50,000 in there, and then you keep contributing to it, and you start investing in things like real estate. Let's say you buy a $50,000 home with your Roth, and 20 years later, that $50,000 home is now worth $300,000. I mean, real estate goes crazy over time, right? And let's say over that time, you had it rented out, so you have all that income coming in and growing within your Roth as well. Those are all tax-free profits that you're going to be able to live on later on. And with self-directed retirement accounts, whether it's a solo K, a 401k, self-directed IRA, self-directed Roth, self-directed SEP, simple, whatever it is, self-directing, all that means is you can invest in almost anything. So crypto, what's crypto doing? Imagine if you would have bought crypto a few years ago with a Roth IRA when it was $500 a coin, and now it's over $50,000. That $49,500 in growth would all be tax-free coming out in a Roth IRA that you bought crypto with. So why not start buying crypto? See, when it comes to crypto, and again, I'm not the professional or the expert on crypto. I listen to people like Spencer, but when it comes to crypto, my strategy is long-term. Well, it's quick trades and it's also long-term. So I like playing around with some of the shit coins just because they're fun to get in, let it jump up with all the pumping and everything that happens. But I like to do the pump and dump. So when it gets up to where I'm happy, I dump it. I don't care if it goes higher. I don't care if it crashes, I get out. So that's kind of fun for me to play with. But for my long-term serious crypto money, put it in a retirement account, because that's the crypto that I believe is going to do well. Even if it loses 90% of its value over time, I think it's going to take off. Okay. So if I know it's going to take a long time, 10 plus years to get to where I want it to be, why would I not store it in a tax qualified, a tax-free environment? So a Roth IRA, buy it with that, let it sit in there till 20 years down the road, and then wherever it's at, it comes out tax-free. So to me, that makes a lot of sense. So then it just becomes, how are we going to strategize our qualified funds? What are good uses for qualified funds versus non-qualified funds? And then when it comes to non-qualified funds, this is all your other money that's not in an IRA, not in a 401k, not in a solo K, that kind of thing. So non-qualified funds, that's where becoming your own bank becomes so important, because you have to store that wealth somewhere. So like I've been saying the entire night tonight, stop storing that wealth at the banks that are paying you 0.01% and making 400 to 1300%, 1600% returns on your money. And if you guys want to double check me on that figure, go to BauerFinancial.com, Bauer Financial, BAEUR, I believe, BauerFinancial.com. And you can read all about the banks, how they invest, the gains that they make, the money that they make, and everything like that. You guys can fact check me on that. So stop storing your wealth and your investment money at these banks and start storing in your own bank where it's compounding uninterrupted and growing for you for the rest of your life. Again, what I was saying just a minute ago, where's your money? Where's it going? Where are you housing it? What are you doing with it? Can we get it into a qualified tax-free environment? Or can we get it into a bank that's constantly compounding and growing, even when we're using that money in real estate deals, compounding and growing, even when we're using that money in private lending deals? And how much of our money can we get into these two different buckets and categories? And I promise you, if you start focusing on this stuff and building these two categories, your wealth is going to start to take off, accelerate, and explode. Just because I see it happen all the time. We have so many testimonials. If I could, I'd start putting in a bunch of testimonials for you guys. I just didn't have time to build them into a PowerPoint or anything like that. But we have so many testimonials and students and clients that are doing exactly what I've talked about tonight. It's not hard. Where's your money? Can we get in these buckets? Can we start doing these strategies that I've been talking about all night tonight? And it's amazing where you are a year later, 2 years later, 5 years later. Just imagine where you'll be a decade later. That's the one thing I hear all day long. I talk on the phone with clients almost all day long, 3 days a week. And the other 2 days a week, I'm off and on, but 3 days a week, almost all day long. And that's what I hear the most is, I can't believe that this stuff, I never learned about it before. And man, I wish I would have got started sooner. Those are the two things that I hear more than anything else. This stuff's not taught in financial education like this is not taught in high school and college and other places. You have to seek it out and you have to want it. Why is that? Well, we can get into conspiracies. My thought on it, really boils down to, it takes all kinds of people to make the world go round. If everybody controlled their own money, if everybody was an entrepreneur, if everybody took control like this, things would look a little bit different. And I guess we would have to see what would happen. But that's my goal. My goal is to get more and more and more people. I mean, I'll give you one example. The 5% we were talking about earlier of all the self-directed IRAs in this country, there's millions of them, trillions of dollars in retirement account funds, qualified funds. Less than 4% are in self-directed accounts. So that means that 96% of people are doing what they've always been told to do: give up control of their money. Because if it's not in a self-directed account, who's managing that money? Either a financial advisor, or you are through index funds or through mutual funds or through whatever these Fidelities and people like that offer. And guess what? You're not really controlling the money that way, because it's invested in a bunch of companies. Do you have control over Apple? Do you have control over Facebook, Meta, whatever? Do you have control over Alphabet or Google? No. Those decisions are made by other people. So just because you're investing in these different types of diversified funds doesn't mean you're actually controlling it. So take control of your money, as amazing will happen. You want to get on become part of the 5%, become part of the 2%, become part of the 1%. These are the strategies that they use day in and day out. And trust me, if they're not, if you get to somebody that's $100 million level or more, maybe they have somebody managing their money for them, but those are the money managers, advisors that are implementing these techniques and strategies. If I have somebody come to me and say, hey, I want to run infinite banking by my financial advisor, all I have to do to determine if that financial advisor is going to be understand it and be on board with it versus have no idea what the heck they're talking about and be completely against it. Because if they're against it, if the person does it, the advisor is losing all the money, is ask them, how much money are you managing? If it's in the millions, that advisor knows about infinite banking. They're already taking advantage of these strategies for that person, so they'll be on board. If it's under $1 million or more, that's just a stock financial advisor like I was for a couple of years at Ameriprise Financial, and they're never taught true wealth building strategies like we're teaching here. It's just a fact, guys. And you can go ask your financial advisors about this stuff, and I guarantee you it'll be the same thing. All right. So with that being said, I just want to show you guys, we used this example last time. I just want to give you one quick example, and then I'm going to hop on the site and take your questions and answer any questions that are out there. So if you have any questions, start putting those in the Q&A box, and I'm going to hit those next. But before we go there, this is just one of my favorite examples. And I was just talking to somebody about this the other day. So if they're on, hopefully they're paying attention. All right. So this is what we call consistent, predictable income for the rest of your life. So what this is what we call the Bank of C&M Jones. So this is Charles and Mary Jones. They were actual clients. This was a few years back now, but they were actual clients that follow these exact strategies we're teaching you on the qualified fund side. Okay. So qualified funds, talking about retirement accounts. So Charles and Mary were 10 years from retirement. They're 53 and 55 and 53 years old, and they were 10 years out from when they wanted to retirement. They had $350,000 in their retirement accounts currently. They were inexperienced managing investments, and they didn't want anything to do with it. They did not want an active role, meaning they didn't want to actively go out there and buy rental properties or get involved in deals or trade stocks or trade crypto or whatever. They didn't want an active role. They wanted to be passive investors, and they just wanted to continue to work their careers and manage the farm that they had. Okay. But they had $350,000. Their goal was to be able to retire with a predictable income that they knew that they could live on. So they knew exactly how much money that they needed. So we built this out for them. So what they did is they decided to become their own bank by taking their retirement accounts, okay, and transferring those into self-directed retirement accounts. Now, again, whether your money's at Fidelity or Morgan Stanley or at a financial advisor or Charles Schwab or wherever it is, wherever those qualified funds are, wherever that IRA is, whatever it is, the only difference in that financial institution and a self-directed financial institution, or custodian as they're called, is what they allow you to invest in. So again, a Fidelity or whatever is going to invest in stocks, indexes, mutual funds. A self-directed custodian is going to let you invest in almost anything: crypto, real estate, multifamily deals, private money lending, businesses, name it, and they probably let you invest in it. The only things that they don't allow you to invest in, things like collectibles, but we can talk about that more later. So it gives you control of your money. So what they did is they rolled it, they transferred this money over. There's no taxes, there's no penalties for just transferring the money from one custodian to another. So they transferred it to a self-directed custodian, and we taught them how to start doing private money lending. So what they did is they took their $350,000 and they committed to continue to contribute to those retirement accounts $13,000 a year for the next 10 years. $6,500 in each account. So there's contribution limits and things, which we can talk more about later, but combined, they were adding an additional $13,000 a year. They knew they had 10 years to do so. And so what they did is they started doing private money lending, and they started lending money to friends and family around where they live. So they only charged 9% interest on the money that they lent out, no points, which as a private money lender, that's on the lower side of what you can expect to get when you're lending your money out, but they were doing it for friends and stuff. So they didn't want to take advantage. And anyways, it worked for them. That's all they needed to grow their money at to be able to achieve their goal. Their goal was just over $1 million in their retirement account. So what happened is they started lending their money out, and over the 10 years, growing their money at 9%, continuing to contribute $13,000. It then gave them at retirement time, 10 years later, just over $1 million in those retirement accounts. Now, what they did is instead of just pulling that money out of the retirement accounts and using it to live on, they said, listen, we're already lending our money. This is very easy for us. It doesn't take any time. So we're just going to continue lending our money. So they stopped contributing and they just decided to start living off of that $1 million. So the way that they did that is they took the $1 million, they continued to lend it at 9% interest. If you do the math, that creates a $92,000 essentially salary that they have coming in through this private money lending. Or if you break it down monthly, they now know that they have $7,700 a month income that they can now live on. And that's what their goal was for this purpose, without ever touching the $1 million. So when you lend money, I'll just give you an example. If you lent $1 million, million, whatever that number is right there, at 9%, when you're paid from the borrower, the way that most real estate private lending deals do is they pay you the interest on a monthly basis. And then once the deal is done, they return your total principal. Now that can vary and that could change and you can negotiate how that works, but that's the most common for a private lending deal. So if you do the math on that, it creates the $7,700 income through the interest payments that they can use to live on. And then once that deal is done, they get their $1 million back that they can then take and lend out to the next deal to create that income over and over and over again. And there's no market risk. They don't care if the stock market crashes tomorrow. They don't care if Ford Motor Company goes out of business. They don't care if Elon Musk smokes weed on a podcast and the stock tanks or whatever, right? It doesn't matter to them because they're in control of their money. They're lending it out in the way that they understand to people that they know and trust in deals that make sense, where their money is, their principal $1 million is protected at all times through doing private money lending properly. And again, I'll teach this at the 3-day training, what you need to, in a proper contract, how to lend your money to make sure you're always protected, no matter what, even in the case of emergencies or things that occur that you aren't expecting, how you're still protected and your money's still protected every step along the way. So they created that consistent, predictable income for the rest of their lives. So how many of you guys would like to do that, especially if you're approaching retirement age and you are concerned about the market fluctuations, volatility, and everything else that we're facing in this country right now? How many of you would like to know that you can create that predictable income every year for the rest of your lives, right? So that's what this is all about right here, guys. And whether it's qualified funds, whether it's using your own bank and lending it that way, we can create this income for you. So I look forward to joining all of you at the 3-day training this weekend. And what I'm going to do now is go ahead and answer any questions you have, and we'll go from there. So Shauna, has anything come in that I need to answer right off the bat, or have I done a pretty good job?
I think you've done a really good job. The only thing is, we had one person ask about like tax advice, and I just wanted to point out, I let him know that Chris's CPA is joining our MSTV call next week for the first like 30-40 minutes. So like any real estate capital gains questions, I'm pretty sure Chris is a member of MSTV too. So
well, everyone enrolling should get a 30-day free trial.
Yeah. So if you do sign up for the 3-day, I think over the weekend, you'll get a link with the replays of like how to get on MSTV. And then you can also join us for Thursday's call.
Yeah, no, that'd be great. So yeah, I know Brent's coming on to talk a little bit about taxes. Like I said, Solomon will be on, but if you want real in-depth tax advice and be able to openly ask questions and get those questions answered, that's what the Money School TV coaching is. So that's, you get a free 30-day trial to it with enrollment for the 3-day training. And then if you like it, it's $19 a month or $190 for the year, which that price is, we haven't changed that yet, right, Shauna?
No, we haven't changed it, but we've been talking about it.
Yeah, so that price is going to jump up to $1,000, but right now you can still get it for $190 a year. And that's what we do each month on those calls is we bring an expert. And just so you guys know, it's not like this right here. All of you are on the Zoom. If you want your video turned on, if you don't worry about it. You can still chat in and ask questions, but your microphone is on and your video is on, and we all are together on those calls. And all it is different experts that we bring in, and it's real in-depth Q&A, and they're awesome. I mean, it's one of my favorite things that we do every month. So make sure you definitely hop on, especially if you're looking for tax advice on this upcoming one. especially if
Yeah,
you're a real estate investor, because I
it's
know that's
Chris's
Chris's
actual
real estate.
guy. Yeah.
All right, so let me just pull up the page real fast just to go through and make sure I didn't forget anything. So when you go to the money school training, this is the page you'll see. Just click on reserve your seat, and I'll show you real fast how to do the promo code. So when you click on reserve your seat, it's going to pull this up. So what you want to do is under have a coupon right here, you're just going to click that. Maybe. Then you're going to put in your name, information, all that good stuff. And then there it is. All right. So you just put in there 2022, apply coupon. And then when you get to the bottom, it's going to take it from $297, $100 off, so $197. So we'll save you guys a few bucks.
And then Kevin just has one question in the chat, and then Nolan has a question in the Q&A.
Yeah, so Nolan, it's as you just saw, it's $297 for the 3-day class. But if you, since you're on tonight, we're giving you the discount code, takes $100 off. So $197 for the 3 days. Again, we give you all the recordings. You get 30 days to MSTV, so you can hop on our coaching call with us. And then, of course, we're going to do the strategy call with you as well afterwards for no charge. So Friday, I just want to go through the agenda one more time. So Friday, like I said, it's going to be Chris and myself, but Chris has this brand new presentation. You guys aren't going to want to miss this. I mean, it's mind blowing stuff that we're going to go over with you Friday. So make sure you're there, and then we will get into some bank stuff too. So that's going to be important. Saturday, Chris is starting things off, and then we have Kevin Shortell coming on to talk about notes and talking about that strategy, taking advantage of the U.S. Treasury and the program they have for foreclosures. Kelly Cardenas is he's a business and branding guy, and Kelly's just one of those guys that you kind of see and you're like, you can just tell something special about him, and he's got a really cool story, and he's just an awesome guy. And I promise you, every one of you will get something out of listening to Kelly. Matt is not going to make it, as I mentioned earlier. So we're going to send you the recorded presentation from Matt. So that's going to be tapping into home equity agreements and the equity in your houses and things like that. So we'll send the recording on that. And Shauna, is that where the real estate's going to be instead?
Yeah, so that same slot from
well,
yeah, it's 12 from 12:30 to 1. Jamil will be there about astro flipping.
Okay, cool. So we'll bring Jamil on during that time slot. Spencer is going to be on talking about crypto, and then Solomon. If you're, I would recommend everybody stay on for this, because it just really opens your eyes to what's possible when you start taking advantage of things like the wealthy do. And it also kind of gives you a goal. Hey, let me build my income to a level where I need to take advantage of 1041 tax reporting and trust foundations. So awesome. It's not recorded though, so you got to try and make it live. And then Sunday, we're going to kick off Private Money Club and private lending. So if you like the passive investment side of things, definitely be on for that. Brent Carlson and asset protection. And Brent usually talks a little bit about taxes as well. Andrew's going to be talking about Flipping Edge, which is software to be able to start finding deals and evaluating deals. And Flipping Edge does all kinds of stuff. Like I mentioned, Greg Hurleen's going to come on talking about self-directed investing. Chris Root will be talking about mobile home park investing. And then we'll wrap things up with Q&A at the end of the day. We do Q&A throughout the entire time also. So Chris and myself will be on the entire time, even when there's other experts and speakers. So we'll be chatting with you guys the whole time also. So that's the agenda for the weekend. I feel like there's always special something that happens too during it. But yeah, so you can hop on here, find out a little bit more information, learn a little bit more about the people. Here's Kelly right here. Just a crazy cool guy. Greg, who knows where he's at in that picture, Shauna, huh?
Yeah.
All right. And then I guess you get some extra bonuses also. So just some more information, the file vault, comprehensive wealth builder kit. So all good stuff. All right. So that's that. Let me hit these questions and we'll wrap for the evening. All right. So how much is the investment? Just answered that. 197 if you use the code. All right. So Jared's asking, if you have 100,000 in qualified 401k funds and have to do something with, which is a better answer, self-directed IRA or an IBC policy? So infinite banking, the privatized banking, the specially designed policies, those are not done with qualified funds. So what we would just need to do is, figure out a strategy depending on your age as well. Maybe it makes sense to pull out that $100,000 over a couple of years, dump it in the policy over a couple of years, and do a smaller amount ongoing. All right, Jared. So that could make sense. You would be hit with a 10% penalty for doing that. So probably not my favorite strategy. I would probably, with that money, look at more converting it over. Answer this real fast. Is it an active 401k or is it an old job, like an old 401k? Okay, so with an active 401k, you're probably not going to be able to do much with it. Most plan administrators only allow you to change the way the 401k works as far as like transferring the money or taking control of it, things like that, once you're gone from the job. When you're actively there, oh, all right. So he just resigned. So all right, forget what I'm saying then. So yeah, so you'll be able to move that money. So what a better strategy would be, what I would recommend is probably as soon as you leave and the money's available to you, transfer it to a self-directed retirement account. And something I would love to do is explore with you doing what's called a Roth conversion. So this is a law it's been around for years and years, but like everything else, they're trying to ruin everything good. So there's policies out there right now, proposals that are going to eliminate this strategy. So I would recommend taking advantage of it while you can. And what it is it's basically what's called a backdoor Roth conversion. So when you do a Roth IRA, you're limited to how much money annually you contribute to it. So typically like $6,500 a year. So to build up $100,000 in a Roth IRA could take you 20 years. But if you can still take advantage of this strategy, you can do what's called a Roth conversion. So you can take that 401k, traditional 401k, and convert it to a self-directed Roth IRA. Now you will pay taxes on it, no penalties. You will pay taxes now, but once it's in the Roth, you'll never pay taxes on any of it ever again. And again, what are taxes doing? They seem to always be going up, right? So why put off paying taxes till later when we can take it now, basically, you know what I mean? We can take it now, pay them now, but get them in that environment that now has tax-free growth. Now you take that money in the Roth self-directed IRA and you go out there and you start getting involved in real estate deals. You start getting in some businesses that are really growing your money. And now all the profit in there is tax-free growth for later on. So Jared, I would love that strategy for you. And that's something I would love to talk more about with you, because I think that would be awesome, especially if you're getting into taking control of your money and, learning about things like notes and private lending and crypto and everything else that we do. So let's definitely talk more about that. And if you're coming to the 3-day this weekend, it's going to open up your eyes to all these opportunities and all these options when it comes to self-directed investing. Because that's one of the problems with self-directed investing, or even with being your own banker, is once your debts are paid off, once you bought everything you want to buy, you want to use your policy or you want to use your retirement account to keep the money moving, investing, growing wealth. But if you've never been taught about private lending, you've never been taught about crypto, you've never been taught about real estate or businesses, you might not know how to do it. So that's really what this 3-day is for, is teaching you, it's great to take back control of your money, but oh shit, now I control it. What am I going to do with it? Right. So that's why we have these trainings in place for you to learn about. So that's exciting stuff though, man, Jared. That could work out really well for you in the long run. And I don't know if that's a good thing or bad thing for resigning, but I always say congratulations. Move on to something bigger and better, right? All right. You said there was a question in the chat box, Jenna?
Yes, it was. Hold on, I gotta. It was Kevin Kelly. He says, do you personal loan backed by real estate equity? Do you personally loan? Probably not. You probably loan with an entity, I think, if that's the question I'm.
Oh, no. Yeah, Kevin. No, I got you. So he's asking, can you use, actually, Jared asked the same thing. And no, that is. So yes, absolutely. So he's saying, can you do private loans using your equity from your home? Absolutely. That's a great strategy. Okay. I actually have a quick, here, I can show you real fast. Hold on. Let me just show you one more quick example. This will take me 3 minutes. You guys got 3 more minutes? I know we're going over right now. Sorry, Shauna. Here, let me just show you this one example. This will literally take me 2 seconds. So if I had my board behind me, I'd draw it out for you, but this will be easier since I have it right here. All right, share screen. All right, so check this out. So this is just a real plain and simple example of using a HELOC loan. So you take $100,000 from the HELOC loan. Let's say the HELOC loan charged you 5%. All right. Right now, HELOCs are more like 3 to 4%. Again, just an example. So $100,000 HELOC loan at 5%. You're going to, when you take a loan from a HELOC, you are going to have to pay back that HELOC loan. So in this example, we're paying back $5,000 a year or $416 a month in interest only payments. All HELOCs are different. So when you open a HELOC or you're talking to the banks about opening a HELOC, ask them what their terms are, what the interest is, what the repayment requirements are. Is it interest only? Is it interest in principal? Is it amortized? What that looks like. Is there a certain amount of time that the terms are? So find all that stuff out. But using this simple example right here, I then take that $100,000 and I do a private money loan on it at 10% interest. So that 10% interest is paying me $833 a month. So I have $833 a month coming in. I'm paying $416 a month in HELOC money to use that HELOC. So it gives me basically a $5,000 a year profit or $416 a month for doing nothing, just tapping into the equity of my home and lending it out through a private money deal. And again, there's private money deals, 12%, 15%. There's points involved sometimes. So there's ways to increase that side of it. And then HELOCs right now, I mean, I just talked to somebody yesterday that said they had it was like a 0.5 or 0.5% introductory rate on the HELOC for the first year. So the first year, they're basically paying zero interest on that HELOC. So in that case, $833 a month would be pure profit. You're not paying anything back. Or in a home equity agreement, Matthew Sullivan with Quantum RE, that won't be on Saturday, but we made their presentation. In that case, there's no repayment. So that $100,000 in equity you're getting from the home equity agreement is all profit that you're lending out. So $833 a month in profit. So yeah, great example. So thanks for asking. And we love doing that. And then, we have examples on YouTube on how people use home equity agreements to filter it through a banking policy. So you have the compounded growth for the rest of your life, take that money out and lend it where you now have money coming in through that. So there's lots of strategies. Again, this was pretty simple tonight. It's why we spend 3 days with you and we do ongoing training with you to teach you these more advanced strategies as we get rolling with privatized banking and all this stuff. And then actually tomorrow, if you want to join me tomorrow for the Wealth Webinar Wednesday, I'll show you some more examples on private lending using equity and the privatized banking, infinite banking concept. So I'll go into that a little bit more tomorrow too, Kevin. Did that answer your question, hopefully? All right. He wants to loan $15,000 to go to school. Well, Kevin, you could just do a HELOC for that or a home equity agreement. You don't need me for that. Now, can somebody do that? Yeah, you could definitely do that. You could find somebody. You could find somebody that can lend you money. I mean, if you want to use your property as equity, as the collateral, I give you the money. I mean, if you can go do whatever you want with the money. I mean, if it gives me a position, there'd be a lot of variables. So in that scenario, I would be what's called a second lien position. Assuming you don't already have any other liens on the property, you just have a mortgage, it would put me in a second lien position. So there could be a little bit more risk involved that way. Now, if it was a home that had no other liens on it, so no mortgage, it was paid for, and I could assume first lien position, I would do that all day long. Absolutely. Yeah. So Kevin, there's a little bit more that goes into that. I mean, if you're behind the mortgage, you need to get caught up on that. Maybe you take advantage of the U.S. Treasury thing. So something we could talk more about. So, all right, guys. Well, I don't see any other questions coming. I want to respect everybody's time. We do record the webinars. We record the wealth webinars also, Nolan, so we could send that out to you. Shauna, when is the recording for the wealth webinars? Does that go out like the following Monday usually?
Yeah, I would say at least by Monday.
Okay. So if we do a webinar on Wednesday, you'll get the recording for it, a few days later, because we usually go in and edit it, and then we put it on the YouTube channel. If you're not following us on YouTube, also go do that now. It's YouTube at the Chris Naugle. And just subscribe and hit the bell, and you'll know whenever we put new recordings up. We put new trainings up almost every day. And then whenever we go live for our live streams, the WTF podcast every Wednesday morning, the Ask Me Anything every Wednesday afternoon, you'll get an alert on your phone and your computer whenever we go live. So you can hop on and watch us live and interact and have fun with it. So, all right, guys, thanks so much. Look forward to seeing everybody at the 3-day training on Friday, if not tomorrow on Wealth Webinar and our other shows that we do. So thanks for being here. We'll talk to you guys soon. Thanks, Shauna.